Hi, everybody. After Bismillah Rahman Rahim, we start in the name of Allah. I am very happy to meet you in this new course of Business English. Dear students, dear culture and language and economics lovers, we start with this science, the third science of Business English. And our subject now is very important, is after the first subject, economics, and the second subject, commerce, we have the third subject, which is finance, which is very important for all students in management sciences and also in economics topics. So we mean economic sciences, finance, financial sciences, accounting, and commercial sciences also. But we focus on students of management sciences, who are our students. We start this text, the third text, which is very important for us, finance, because finance, we find finance in all our studies in management, in financial analysis, in financial management, in financial diagnostic, in financial strategies, which finance is an important element of management, an important component of management, is, in my opinion, is the most important element in management, in the modern management. In modern management, we use finance as a tool and also as application or as domain of for developing and for ameliorating or improvement performance of enterprise. We start with the text. We have finance, introduction to finance. Finance is a science of funds management. We have funds, les fonds, funds management, how I manage my money or my funds. Is finance is the science of fund management. The general areas of finance, the topic, the domain of finance, are business finance, personal finance, and public finance. In order from personal finance, public business finance or corporate finance, and we have also public finance. Finance includes saving money, to save money, I have money and I will save money, and often includes lending money, to lend money. I give my money to another who need this money, who needs this money. The field of finance deals with the concepts of time. Time is power, time is money, time is money, time is power. Money is essential element of finance, and risk. We have project, we have finance, and we have risk. In even project, in even enterprise, we have risk. This risk is related to the time and the money. We have three concepts which are very important: time, money, risk, and how they are interrelated, relation between them. It also deals with how money is spent, and budgeted, how to spend money and how to budget money. Budget is, you know it in French, le budget, also in Arabic, الموازنة. Budget is very important. Budget is very important and is a tool of measuring the performance of enterprise or of state in 1 year. The facet of finance is through one facet of finance is through individuals and business organizations. Business organization, it means enterprises, which deposit money in a bank. The bank then lends the money out to other individuals or corporations for consumption. We have two main types of credit or of loans, or of we have loan of consumption to consume, like to buy a car, or investment, like to finance your project. If you have project, you finance your project. We have loan for consumption and loan for investment, and charge interest on the loans. Loan, it means credit. Loan, it means credit. Or we can say loan or credit, and we charge interest on loans. Central banks, such as the Federal Reserve System banks in the United States, and is a Federal Reserve System bank in United States. We have central banks in each state of United States, and the central banks is the Federal Reserve System banks in United States. And Bank of England, Central Bank of England, in the United Kingdom, you have United Kingdom is UK, England plus Scotland plus Northern Ireland and plus Wales. They constitute United Kingdom, UK. Are stronger players in public finance, acting as lenders of last resort, as well as strong influences on monetary and credit conditions in the economy, which determine the credit of conditions, the rate of interest in charging loans for commercial banks, which lends the commercial banks is less lenders. They are central banks, like central banks of Algeria. Okay. Now we have branch of finance. We have three main branches of finance. Three levels. The first level is personal finance. Finance existing in our life. We can't exclude finance from our life. All our decisions in this life are financial decisions. To go to study is financial decision. To start work or project is a financial decision. To engage in marriage, wedding also is financial decision. Also, to go retirement, to get your retirement, also is financial decision. They are all financial decisions, and our life, personal life, is composed of many or a series of financial decisions. In our life, we can't exclude the importance of finance, or because our decisions in this life are financial decisions. We have personal finance, at the level of persons. Personal finance decisions might involve paying for education, financing durable goods such as real estate and cars, paying insurance, example, health and property insurance, assurance sociale, investing and saving for retirement, Personal financial decisions may also involve paying for loan or debt obligations. In our life, in personal life, we have finance. We have also finance in the second level, which is corporate finance or business finance, which is specialty in financial sciences. Corporate finance, we can say also managerial finance, is the task of providing the funds for corporations' activities. It's task of providing the funds for corporations' activities. For small businesses, this is referred to the SME finance, small and medium enterprises. It generally involves balancing risk and profitability, while attempting to maximize an entity's wealth and the value of its stock. This is the role of the financial manager in enterprise or in direction or in organization. This is its role, is to providing the funds for corporations' activity or for organizations' activity. The third level of finance, or the third branch, is finance of public entities, or we can shortly say public finance. Public finance. Public finance describes finance as related to sovereign states, like Algeria is French state, like France, like UK, like USA, like Tunisia, like Spain, etc. They are all sovereign states. Sovereign states. And this finance describes finance as public finance as related to sovereign states and subnational entities. Subnational entities. We have entities United Nations organizations, for example. United Nations is an entity. Okay, the bank, World Bank of Settlement also is entity. They are entities or sub-national entities. We have also states, province, like Quebec is province, counties like Daira in Algeria, municipalities like in Algeria we say Baladia, in Algeria commune in French, municipalities, etc. And related public entities like school, like university, they are all related to the state. They present the state or agencies. It is concerned with identification of required expenditure of a public sector entity, source of that entity's revenue. We have public expenditures and public revenue, the source. The budgeting process, the budgeting between these needs or expenditures and our revenue, which are from taxation, which is the most or the main source of revenue. And we have debt issuance, municipal bonds, or for public works project. Now that we have finance in our three levels, in personal level, corporate organization level, and also in state level or public finance is state level. I will give you some fields or some important fields of finance. We have the first, financial economics. Financial economics is the branch of economics studying the interrelation of financial variables, such as prices. Prices are financial variables. Interest rates are financial variables, and shares are financial variables, as opposed to those concerning the real economy, like production, GDP, gross domestic product, is a real variable, is not financial variable. For example, financial economics concentrates on influences of real economic variables like production or labor on financial ones like prices or interest rates, etc. In contrast to pure finance study relation between financial variables and financial variables. The relation between financial variables, only financial variables, but the interaction and the influences of financial variable on real variable, this is the study by the topic or the branch or field of financial economics. The second branch also we have financial mathematics. You know all the importance of financial mathematics. Financial mathematics is the main branch of applied mathematics. We have applied mathematics, applied in physics, applied in astronomy, in banks, in enterprises, in institutions. This is applied mathematics. Mathematics that can be apply in our job, in reality, in our job. It's not abstract mathematics. We have abstract mathematics is academical mathematics, and we have applied mathematics. Then financial mathematics is a branch of applied mathematics concerned with the financial markets like stock exchange and banks and insurances, etc. We apply financial mathematics. Financial mathematics is the study of financial data with the tools of mathematics, mainly statistics. We use statistics. Such data can be movements of securities, stock and bonds, etc., and their relations. Another large subfield is insurance mathematics. We have the subfield of financial mathematics. We have insurance mathematics. This is also known as quantitative finance because we use mathematics and statistics in this financial mathematics that we apply in the sector of insurance. And practitioners of this insurance mathematics is as quantitative analysts. They are analysts, quantitative analysts. The third branch, which is not developed in Algeria, unfortunately, is experimental finance. Experimental finance aims to establish different market settings and environments to observe experimentally and provide lens through which science can analyze agents' behavior. Through this experience, we can analyze agents' behavior, such as consumers, producers, enterprises, state, etc. And the resulting characteristics of trading flows, information diffusion and aggregation, price setting mechanisms, and the return process. Researchers in experimental finance can study to what extent existing financial economics theory, the theory of economics or financial theories, makes valid predictions and attempt to discover new principles on which such theory can be extended. This is the role of experience. We apply experience in experimental sciences like physics, like chemistry, like astronomy, like biology, geology, but also we can simulate this and we can make experiences in finance also, in finance through using experimental finance. In Nigeria, we are very far from this, and I hope that we improve our financial models to get this step very important, and also to use experimental finance in our enterprise and to learn also and study experimental finance in our universities. Research may proceed by conducting trading simulations, or by establishing and studying the behavior of people in artificial competitive market like settings. Also, the fourth branch is not applied in Algeria. We are very far from this, unfortunately. This is behavioral finance. Behavioral finance. What means behavioral finance? Behavioral finance studies how the psychology of investors or managers affects financial decisions and markets. Yeah, you know that decisions depend to the personality, to the mind, to the vision of investors or managers, and the psychological aspect is very important. This branch is the interaction between finance sciences and psychology and sociology. We have financial sciences, finance, sociology plus psychology. We have this. We can get this new branch, which is behavioral finance. Behavioral finance has grown over the last few decades to become central to finance, to become important in finance. Behavioral finance includes such topics as empirical studies that demonstrate significant deviation from classical theories, models of how psychology affects trading and prices, models. When I say models, it means mathematical and statistical and econometrical models. Forecasting based on these models, or on these methods, studies of experimental asset markets and use of models to forecast experiments. A strand of behavioral finance has been dubbed quantitative behavioral finance. Why quantitative? Because we use mathematical and statistical sciences in this experiments and in this branch. For this, we call it quantitative behavioral finance, which use mathematical and statistical methodology to understand behavioral behaviors in conjunction with valuation. Some of this endeavor work has been led by Gondos Kajinal, professor of mathematics and editor of Journal of Behavioral Finance during 2001 to 2004 or 2004, and collaborators including Vernon Smith, 2002, Nobel laureate in economics. We have Nobel laureate in economics in this field, in this branch, which is financial, or which is behavioral finance, which is become central and important in finance. We have Vernon Smith, who got prize of Nobel in economics for this his works of about financial. About behavioral finance. We have also David Porter, Don Branovich, Vladimir Alieva, Ahmed Doran. Also, we have Chief Madura, Rai Storm, and others have demonstrated significant behavioral effects in stock and exchange traded funds. Among other topics, quantitative behavioral finance studies behavioral effects together with the non-classical assumption of the finiteness of assets. This is very important to study the behavior of manager or behavior of investor in making the financial decision. The fifth and last example of branch of finance, we have intangible asset finance. Intangible asset finance is the area of finance that deals with intangible assets such as patents and trademarks like Coca-Cola, Pepsi, etc. They are trademarks, goodwill, reputation, and reputation also, goodwill of this enterprise, reputation of this enterprise, which are not tangible, they are intangible. Also, we can say prologicials, which are very important also, applications, software of any project is very important, is not tangible, but also have finance effects or have finance value. This is intangible asset finance branch. I hope that you understand this explication of our three subject, or our three text or subject in or three course, or also our third course in business English, which is finance. I hope that you work well and improve your level in your domain, which is management sciences, and also you work well in English and improve your level in this language, which is very important, and the universal language. See you in the first text or the first subject about also your field, or your option, which is management. Management is an important text for any student of management sciences. Dr. Al-Kubali, your lecturer, was with you. I hope to see you in the next time and the next science. My best wishes for success and for getting well in this module and other modules. Okay. Assalamu alaikum, my salutations.